Taiwan Semiconductor Manufacturing Company produces 92% of the world's most advanced chips. Not some, 92%. That's one company, on one island, that China considers a rogue province and has vowed to reclaim by force. And when that invasion happens, the global economy doesn't slow down. It stops. Right now, TSMC has a market capitalization of $1 trillion. But the real value isn't the company, it's the monopoly. Apple, Nvidia, AMD, Qualcomm, every company making cutting-edge technology depends on TSMC chips manufactured in Taiwan. There is no alternative supplier at the same technology node. None. The Pentagon published an assessment in December 2024 showing that if Taiwan's chip production stops for even 3 months, global GDP contracts by $1 trillion. Not from war damage, just from chip shortage. Cars can't be built, smartphones can't be made, data centers can't expand, AI development halts. The concentration happened deliberately over 40 years, the exact period when China's military modernization accelerated and cross-strait tensions increased. The probability of Taiwan becoming irreplaceable in semiconductors while simultaneously becoming a military target being coincidental? Zero. This is the pattern of every strategic resource monopoly in history. OPEC with oil in the 1970s. De Beers with diamonds. Rare earth processing by China today. Whoever controls the irreplaceable resource controls the global economy, and Taiwan controls the semiconductor bottleneck. Chris Miller, author of Chip War, stated in November 2024, TSMC isn't just a company, it's an economic deterrent. As long as the world needs Taiwan's chips, invasion is economically suicidal for everyone including China. But that deterrent only works if invasion is economically rational. Xi Jinping doesn't think like an economist. Even more alarming, the United States is spending $400 billion through the CHIPS Act to build domestic semiconductor production. But even with maximum investment, US production won't match Taiwan's capabilities before 2030. And China knows the window to invade closes when that production comes online. The assumption that economic interdependence prevents war broke completely when you realize China is willing to accept economic devastation if it achieves reunification, and the United States is preparing for exactly that scenario. Here's what should keep you awake at night. China invading Taiwan isn't a geopolitical crisis. It's an economic extinction event. 92% of advanced chip production goes offline. Every industry depending on semiconductors collapses simultaneously. And there's no substitute, no stockpile, no backup plan that prevents global economic catastrophe. Think about that. Before we break down exactly how one island came to control the entire global semiconductor supply chain, why TSMC's monopoly is both Taiwan's greatest defense and greatest vulnerability, what happens to the world economy when chip production stops, and why 2027 is the deadline that determines everything, if you want to understand the most dangerous economic choke point on Earth and why it's about to break, hit that subscribe button and turn on notifications. Because what we're revealing will completely change how you see technology stocks, global supply chains, and why Taiwan matters more than any other geopolitical flashpoint. Leave a comment. Can the world economy survive without Taiwan's chips? Will China invade before US domestic production comes online? And is your investment portfolio prepared for semiconductor supply shock? Let's start with the numbers, because they reveal the scale of Taiwan's semiconductor monopoly and why it's unprecedented in modern economics. Taiwan produces 60% of all semiconductors globally by revenue. But that number is misleading because it includes older technology chips. When you look at advanced chips, the chips powering AI, high-performance computing, advanced smartphones, autonomous vehicles, the concentration is terrifying. Chips at 7 nanometer node and below, which represent the cutting edge of semiconductor technology, are 92% produced by Taiwan, TSMC specifically. Samsung in South Korea makes about 8%. Intel in the United States makes essentially zero at the most advanced nodes. 7 nanometer and below isn't just faster chips. It's the technology that enables AI training, real-time data processing, energy-efficient mobile computing. Everything that drives the modern economy requires these advanced chips, and one company controls production. TSMC's revenue in 2024 was $86 billion, but the economic value they enable is measured in trillions. Apple's revenue is $400 billion. Nvidia's market cap is $3 trillion. AMD, Qualcomm, Broadcom all depend on TSMC manufacturing. If TSMC stops production, Apple can't make iPhones. Nvidia can't make AI chips. AMD can't compete with Intel. The entire AI boom that added $10 trillion to market capitalizations in 2023 and 2024 reverses overnight. Now, how did this monopoly happen? Because it's not natural. It's the result of deliberate industrial policy, massive capital investment, and geographic concentration that any economist would say is insane from a risk perspective. Taiwan's semiconductor industry started in the 1970s with government support. Morris Chang, the founder of TSMC, was recruited from Texas Instruments to build Taiwan's chip industry. The government provided funding, land, tax incentives, and access to U.S. technology through partnerships. The business model TSMC created was foundry services. They don't design chips. They manufacture chips that other companies design. Apple designs the chip for iPhones. TSMC manufactures it. Nvidia designs AI chips. TSMC manufactures them. This model requires enormous capital investment. A single advanced semiconductor fab costs $20 to $30 billion to build. The equipment inside, extreme ultraviolet lithography machines from ASML in the Netherlands, costs $200 million per machine. TSMC invested relentlessly. Every generation of chip technology, they built new fabs with more advanced capabilities. They stayed ahead of Samsung and Intel by investing more, moving faster, and achieving higher yields. By 2020, TSMC was the clear leader. And by 2024, the gap was insurmountable. Intel is 5 years behind on technology. Samsung is 3 years behind. Nobody else is even trying to compete at the leading edge. But here's where economics and geopolitics collide catastrophically. Taiwan is 100 miles from mainland China. China claims Taiwan as part of its territory, and China has a military capable of invading. TSMC's monopoly creates what strategists call the Silicon Shield. The logic is that invading Taiwan would be economic suicide for China because they'd lose access to advanced chips. And it would be economic suicide for the United States and allies because they'd also lose access. So nobody invades because everyone loses. But that logic only works if all parties are economically rational. And Xi Jinping has made clear that reunification is a political and historical imperative regardless of economic cost. China's economy is slowing. Demographics are collapsing. Debt is unsustainable. Xi needs a legacy achievement. Taking Taiwan is that achievement. And if it requires economic sacrifice, he's willing to make it. The United States recognizes this. That's why the CHIPS Act allocated $52 billion in subsidies and $390 billion in total incentives to build semiconductor manufacturing in the United States. But here's the problem with timelines. TSMC is building fabs in Arizona. The first fab opens in 2025, full production by 2027. But it will produce 5 nanometer chips, not the most advanced 3 nanometer or 2 nanometer chips that TSMC produces in Taiwan. The most advanced fabs stay in Taiwan. That's deliberate policy. Taiwan keeps the leading edge at home to maintain strategic importance. If all advanced production moved to the US, Taiwan loses the Silicon Shield. So even with maximum US investment, Taiwan remains irreplaceable through at least 2030, and China knows this, which means the window to invade is now to 2027 before US production reaches scale. Let's talk about what invasion actually looks like economically, not militarily. Because the military analysis gets attention, but the economic impact is what kills the global economy. China doesn't need to successfully occupy Taiwan to destroy the semiconductor industry. A blockade works. Surround the island with naval and air forces. Stop ships from docking. Stop flights from landing. Taiwan's chip production stops within weeks. Why? Because semiconductor manufacturing requires constant supply of ultra-pure chemicals, gases, and materials. Hydrofluoric acid, photoresists, rare gases. These are imported. Taiwan doesn't produce them domestically in quantities needed. If the blockade lasts 30 days, fabs start shutting down because they run out of inputs. If it lasts 90 days, the fabs suffer damage to equipment that takes months to repair even after supplies resume. And here's the cascading failure. TSMC doesn't just make chips for end products. They make chips that go into the equipment that makes other chips. Semiconductor manufacturing equipment from Applied Materials, Lam Research, ASML, all use chips that TSMC makes. So when TSMC stops, the entire semiconductor equipment industry slows, which means even the fabs that aren't in Taiwan start having problems maintaining and expanding capacity. The economic impact is immediate and devastating. Within 30 days of Taiwan chip production stopping, car manufacturers start halting production lines. Modern cars use hundreds of chips. No chips, no cars. Global auto production is 90 million vehicles per year. 30 days of Taiwan shutdown means 7 million cars not produced. That's 300 billion in lost economic output from autos alone. Smartphone production stops. Apple, Samsung, Xiaomi all depend on Taiwan chips. Global smartphone production is 1.4 billion units per year. 90 days of shutdown means 350 million phones not produced, 200 billion in lost revenue. Data center expansion stops. Google, Amazon, Microsoft, Meta, all building massive AI infrastructure. They need Nvidia chips. Nvidia chips are made by TSMC. No new data centers, no AI development. The $10 trillion AI boom freezes. Consumer electronics, medical devices, telecommunications equipment, industrial automation, military systems, everything with advanced chips stops or slows dramatically. Goldman Sachs estimated in a January 2025 report that a full Taiwan chip production shutdown lasting 6 months would reduce global GDP by $2.8 trillion. That's 3% of global economy gone. But the damage isn't just lost production, it's cascading bankruptcies. Companies that can't get chips can't fulfill orders. They default on debt. Suppliers don't get paid. They default. The financial system that finances all this production seizes up. And stock markets. The Nasdaq is heavily weighted toward technology companies. Apple, Microsoft, Nvidia, AMD, Qualcomm. If Taiwan chips stop, these companies' earnings collapse. Stock prices collapse. Market cap destruction is measured in tens of trillions. Pension funds, retirement accounts, sovereign wealth funds, all holding tech stocks, suffer massive losses. Wealth destruction spreads from tech sector to entire economy. This is why Taiwan chip dependence is the most dangerous economic concentration risk in the world, and almost nobody is positioned for it. Now let's talk about China's calculation because they're not stupid. They know invading Taiwan destroys chip access, but they also know the United States is building alternative supply. So the calculation is changing. China's semiconductor industry is advancing, not as fast as they wanted. US export controls on chip-making equipment slowed them down, but they're progressing. SMIC, China's leading foundry, can make 7 nanometer chips, not as efficiently as TSMC, but they can do it. By 2030, China might be able to produce chips that are good enough for most applications, not cutting-edge AI chips, but good enough for consumer electronics, cars, industrial equipment. If China achieves semiconductor self-sufficiency, even at a less advanced node, the economic cost of invading Taiwan drops significantly. They don't need TSMC if they have domestic alternatives. And here's the strategic calculus. If China waits until 2030, the United States has domestic chip production at scale. Taiwan's silicon shield weakens. But if China acts by 2027, the US doesn't have alternatives yet. The economic pain is maximum, and that economic pain might prevent US military intervention. The logic is brutal but clear. Invade while Taiwan is still irreplaceable. Accept short-term economic devastation, but secure reunification before the window closes and Taiwan becomes less strategically important. US intelligence assessments predict China will be militarily ready to invade by 2027. Not that they will invade, but that they can. The People's Liberation Army will have sufficient amphibious assault capability, air superiority, and missile forces to attempt invasion with reasonable probability of success. And economically, 2027 is before US chip production scales, but after China has achieved enough domestic capability to survive without Taiwan chips for a few years. Now let's talk about what the United States is doing to reduce dependence, because the CHIPS Act is the largest industrial policy intervention in American history, and it's directly aimed at breaking Taiwan's monopoly. The CHIPS and Science Act passed in 2022 allocated $52 billion in direct subsidies for semiconductor manufacturing, but the total economic impact is much larger. Tax credits, loan guarantees, and private sector matching bring total investment to $390 billion. TSMC is building fabs in Arizona. Intel is building fabs in Ohio and Arizona. Samsung is building fabs in Texas. Micron is expanding in New York. The goal is to produce 30% of the world's advanced chips in the United States by 2032. But here are the problems. First, cost. Building fabs in the United States is 2 to 3 times more expensive than building in Taiwan. Labor costs are higher. Regulatory requirements are more complex. Construction timelines are longer. TSMC's Arizona fab was supposed to open in 2024. It's now scheduled for late 2025, and it's over budget by billions. The chips produced there will cost more than chips produced in Taiwan. Second, skilled workforce. Taiwan has 40 years of experience training semiconductor engineers and technicians. The United States lost that capability when manufacturing moved offshore. Universities are ramping up programs, but training takes years. Third, supply chain. Semiconductor manufacturing requires thousands of specialized chemicals, materials, and components. Most are produced in Asia. Building US fabs doesn't solve supply chain dependence unless you also build the entire ecosystem of suppliers domestically. The CHIPS Act tries to address this by funding supplier development, but it's a 10 to 15-year project to fully domesticate the supply chain. Fourth, technology. The most advanced chips TSMC makes in Taiwan use 3 nanometer and 2 nanometer processes. The Arizona fab will make 5 nanometer chips initially. That's 2 generations behind. By the time Arizona is producing 3 nanometer, Taiwan will be on 1 nanometer or even angstrom scale chips. Taiwan keeps the leading edge at home, always, because that's their insurance policy. As long as they have the most advanced technology, they remain indispensable. So the United States is building chip production, but it won't eliminate Taiwan dependence by 2027 or even 2030. It reduces dependence, but doesn't eliminate it. And that means the economic leverage China has by threatening Taiwan remains intact for the rest of this decade. Now, let's talk about the financial markets because almost nobody is pricing Taiwan risk correctly. And when reality hits, the repricing is violent. Technology stocks are valued based on assumptions of continued growth, continued access to cutting-edge chips, continued AI development. If Taiwan chip production stops, all those assumptions break. Nvidia has a market cap of $3 trillion. That valuation assumes they can continue producing AI chips at scale. AI chips are made by TSMC in Taiwan. If TSMC stops, Nvidia's revenue collapses. Not declines, collapses. Because there's no alternative supplier who can make those chips. Apple is valued at $3.5 trillion. A significant portion of that value is iPhone sales. iPhones use TSMC chips. If TSMC stops, iPhone production stops. Apple's earnings collapse. AMD, Qualcomm, Broadcom, Marvell, all dependent on TSMC. Their valuations assume chip access continues. If it doesn't, they're worth a fraction of current prices. The NASDAQ 100 index is heavily weighted toward these companies. If Taiwan chips stop and tech stocks reprice, the NASDAQ could fall 40 to 60%. That's not a correction, that's a crash. And it's not just tech. Auto manufacturers are valued assuming they can transition to electric vehicles. EVs use 5 times more chips than traditional cars. If chips aren't available, the EV transition stalls. Legacy auto stocks crash. EV startups go bankrupt. Defense contractors depend on advanced chips for weapon systems. If Taiwan chips stop, defense production slows. Government contracts can't be fulfilled. The entire stock market is priced for a world where Taiwan chips are always available. And that assumption could break in 2027. Bond markets would also suffer. If the United States intervenes militarily to defend Taiwan, defense spending explodes. Deficits widen. Treasury issuance increases. Yields rise. And rising yields hurt all asset prices. If the US doesn't intervene and Taiwan falls, the economic damage is so severe that recession is guaranteed. Corporate earnings collapse, defaults rise, credit spreads widen, investment-grade bonds get downgraded, high-yield bonds default. There's no scenario where Taiwan invasion doesn't cause massive financial market disruption. The only question is magnitude. Now, some analysts argue that China won't invade because the economic costs are too high. Mutual assured economic destruction. And that's been the prevailing view for 20 years. But that view assumes economic rationality. And Xi Jinping has demonstrated repeatedly that political objectives trump economic costs. Zero-COVID policy destroyed economic growth for 3 years. Xi maintained it anyway for political control. Crackdown on tech companies wiped out hundreds of billions in market cap. Xi did it anyway to assert party authority. Real estate sector collapse is devastating the economy. Xi allows it because he won't bail out developers and create moral hazard. The pattern is clear. When economics conflicts with political objectives, Xi chooses politics. And reunification with Taiwan is the ultimate political objective. The Chinese Communist Party has made reunification a core promise. If Xi fails to deliver, his legacy is failure. If he delivers, even at enormous economic cost, he's celebrated as the leader who completed China's national rejuvenation. So betting that China won't invade because it's economically irrational is betting against observed behavior. And that's a bad bet. The United States also faces impossible choices: defend Taiwan militarily and risk war with a nuclear power, or abandon Taiwan and accept semiconductor dependence on China. There's no good option. Military intervention means potential for escalation to nuclear conflict. Non-intervention means China controls the semiconductor choke point and can strangle the US economy at will. Current US policy is strategic ambiguity. Don't say whether we'll defend Taiwan militarily. Keep China guessing. But that ambiguity is eroding. Trump showed little interest in defending Taiwan. Biden was more hawkish, but also more cautious. The overall trajectory is toward less credible commitment to Taiwan's defense, and China sees this, which emboldens them. Now let's talk about what individuals and investors should do, because the conventional advice of diversified portfolios and long-term holding doesn't work when systemic risk is this concentrated. If you own technology stocks, you're exposed to Taiwan risk. Nvidia, Apple, AMD, any company dependent on TSMC chips. The question is whether the risk is priced in. Current valuations suggest the market assigns very low probability to Taiwan chip disruption, maybe 5 to 10%. But if you believe the probability is higher, say 30 to 50% by 2027, then tech stocks are dramatically overvalued. The hedge is difficult because there's no direct way to short Taiwan invasion risk. You can short tech stocks. But you're also shorting the AI boom, which could continue if Taiwan doesn't get invaded, so you have opportunity cost. You could shift to sectors less dependent on advanced chips. Energy, commodities, financial services, healthcare. These sectors still need chips, but not cutting-edge chips. They can limp along with older technology. You could hold more cash or short-term bonds. If a crisis hits, liquidity is valuable. You can buy assets at distressed prices. You could own gold or other hard assets. Historically, geopolitical crises drive safe haven demand. But the honest answer is there's no perfect hedge. If Taiwan chip production stops, the global economy contracts. Everything suffers. The question is what suffers least. For governments and companies, the answer is diversification and domestic production. That's what the CHIPS Act is trying to achieve. But it takes a decade, and the crisis might come in 3 years. Some companies are stockpiling chips, building 6 to 12 months of inventory instead of the normal 3 months. That buys time but doesn't solve the problem if disruption lasts longer than stockpiles. Some are designing products with older chips that can be sourced from multiple suppliers. But that means sacrificing performance. An AI chip designed for 3 nanometer can't be redesigned for 7 nanometer without losing capabilities. The brutal reality is that the world became dependent on Taiwan chips without building redundancy. And now unwinding that dependence takes longer than the window before potential crisis. This is the single largest economic risk in the world. Not inflation, not debt, not climate change. Taiwan semiconductor dependence. Because if Taiwan chip production stops, everything else becomes secondary to the immediate economic collapse. And the timeline is compressing. China is preparing militarily. The US is preparing economically. Taiwan is caught between. And 2027 is when all the trends converge. If this breakdown of how Taiwan came to control 92% of advanced chips, why that monopoly creates catastrophic economic risk, what invasion or blockade does to global production, and why 2027 is the year that determines everything changed, how you see technology investments and geopolitical risk, hit that like button and subscribe. We're tracking every move in semiconductor geopolitics, every CHIPS Act development, every sign that China is preparing for action. Leave a comment. Can the world economy survive Taiwan chip disruption? Will China invade before US production scales? And is your portfolio positioned for the most concentrated economic risk on Earth? Share this with anyone still buying tech stocks without understanding Taiwan dependence. After this, they'll realize their returns depend on one island staying peaceful, and why that's the most dangerous bet in markets.